generally when there are events, there might be a flight to safer economies or to quality. And then around, what interest rates are doing and inflation is doing. So in environments with low interest rates, often people are happy to take, or investors are happy to take more risk. What we are seeing now is, and this has been the case for a couple of years now, investors are less happy internationally. However, what we find is our portfolio companies who enter these markets have done really well. So, I mean, just quite recently, we sold a business born in Cape Town in the emergency response space to a business called Rapid Deploy. We sold it to Motorola Inc. So that's a great business. They service 911 call centers using technology born in South Africa, but servicing 911 call centers across the US. So not short of, let's say, international investors at the portfolio level, but maybe at the sort of fund level, very much rely on the developed and developing markets in and across South Africa and the rest of Africa.
And Ian, you talk about at the fund level, but you also, I know, the firm prides itself on the exits that you've been able to accomplish. Can you talk about some of the success that you've seen and whether or not it's really fixated on one sector or if you're seeing it across the board?
Yeah, so it's a great question. So as I said earlier, we focus very much on sectors where we have a right to play. So using South Africa as an example, we have a history of health innovation and let's say health technology. So dating back to the days of the first successful heart transplant with Christian Barnard, we really have been at the forefront of health innovation. So health is a big focus of ours and health tech. So I'll give you a great example. One of our businesses born in Pretoria, in South Africa, they provide AI-powered hearing aid solutions. Their Rolls-Royce, let's say, product is called the Lexi hearing aid. So they service primarily the US market, so it's over-the-counter hearing aids. They in north of 20,000 retail outlets, through, it could be through Walgreens, CVS, Best Buy, Walmart, etc. And they've just recently merged with one of the larger competitors or larger players in the space, a business called Eargo. So that's effectively the two largest OTC hearing aid providers in the US, one being South African, that's HAVAIC, one being American, that's Eargo. Those two businesses have merged, creating a really, really large player in the US and North American hearing space. So there's some great stories coming out in sectors where we have that right to play. And as I said, what we're really good at is health innovation, emergency services innovation, business productivity, servicing big corporates, logistics, etc. Stuff that we've, particularly in the private sector, has filled in, let's say, challenges that we have in the public sector for years, and really creating that right to play both locally and internationally.
When is your expectation for when we'll see this broadening out from just health tech to really more exits across the board, across various sectors?
So the African venture capital market is still very much in its infancy. So we came in quite early in terms of the cycle, as it were. So it's a very small sector still. So a lot of the earlier stage investments are now starting to mature. So from a portfolio company level, we are seeing more exits. So us as a fund and as a business, we have 3 funds under management, and we've exited 6 of our companies so far. Really great returns. You look at north of 30% IRRs, and as the example I mentioned with Rapid Deploy, it's to international investors, so very much around creating what we'll call those dollar revenues and rand cost base. But we're seeing more and more other funds, other managers are emerging, so it's really kind of the start of the wave. So there's quite a lot to go. So I mean, you would know that probably 10 years ago there were no, let's say, dollar unicorns born out of Africa. I think there's 6 or 7 now, and that pace is increasing year on year. So it's a really exciting space to be in.
Yeah, and I was going to actually ask you about that, Ian, whether or not that excitement is still sort of something that you have to convince investors to be a part of, or whether or not they are seeing a lot of this momentum picking up and they want to sign up and get on board and invest. Yeah,
so I mean, it's a bit of a mixed answer, I suppose. So you know, a lot of the businesses and technologies are far away from, let's say, the larger sources of capital. So having funds like us who sort of play that bridge to international markets is quite important, because each market in Africa is very nuanced, having the right networks, understanding how to work with people culturally, where the skills gaps are, etc. So having that sort of local manager or local expertise is really important. But we are seeing more and more international players wanting to partner with us, to partner with our companies. So across the portfolio, we would have worked with some of kind of the household names. So in the trade world, General Motors, in the VC world, the likes of a Greylock, in the private equity world, the likes of Patience Squared. So really, some of the bigger names in the industry are starting to take notice of what we're doing, what our companies are doing. But it's still very early days. So it's kind of great to have a platform like this to try and create some additional awareness.
And Ian, I wonder if we can put you on the spot here and ask you what you think is maybe the most overlooked investment opportunity. And you don't have to mention some of your own portfolio companies, but what do you think investors maybe are not seeing that is potentially going to pick up steam in the next few months?
Yeah, so we typically, as a manager, don't I suppose, get into the next big thing, so be it crypto or AI or whatever kind of is the hot topic of the day. So it's not to say that those technologies or themes don't feed into our thinking, but we focus very much on fundamentals. So I'd probably say if I was to pick the one thing that is being overlooked is around the competitive cost base that one can take advantage of when running businesses from South Africa or other parts of Africa. So a great example is one of our businesses, a business called Sportable. It's smart board technology. They're servicing the likes of Aussie rules football, European soccer, or football as they'll call it, throughout the Premier League, North American football, through college football, Canadian football, and then very close to South Africans' heart, rugby union. So this is smart board technology, which I won't go into the details there. You can have a quick Google. It's Sportable. But that business is very much an international business. But what we've done recently, we've relocated a lot of the cost base and the engineering, that really skilled part of the business, back to South Africa. And that's achieved about a 30% cost saving across the cost base. So I'd say the thing that's being overlooked is around the competitive advantage of running businesses from South Africa and other parts of Africa. Obviously, you need to make sure you have the right skills, the right governance structures, et cetera, but really can launch great businesses from the continent.